All right, welcome back to chapter 12. So, yesterday, this is what we learned about employee taxes, right? We talked about what the first federal tax is, which is going to be the federal income tax withholdings. This is where we got to take a look at the percentage method, which uses the circular E table, right? This is what the circular E table looks like. It's basically going to be based on gross earnings, right? Minus any plus any additional income, whether it's from other sources or whether it's from the job itself. And then minus any deductions that either the job has offered you, okay? And then we're going to, in this case, we had a person, Ellie, L, and this person is on a weekly schedule that earns $15.25 an hour and worked 45 hours. So far, we figured out how much her gross earnings were, minus all plus all the income minus all the deductions. So we found out what her taxable amount is going to be. Then we're going to figure out right? We're going to figure out which table we need to look at to figure out her income tax withholdings percentage. So in this case, it's based on how much she's earned. So we determined that it's going to be this row right here, where she's earned more than $433 but less than $1,021. And therefore, she's going to be subjected to a 12% tax in excess plus an additional $19.20. So therefore, we had to calculate what that was, right? And therefore, we solved it to be a total of $49.59. Then, for this one, right, you claim your children after taxes. So in this case, we had to figure out what that amount to take out from her paycheck because she claimed one of her children. So in this case, right, we had to figure out what that was, which was a total of $38.46, which we subtract that out of her total federal income tax withholdings to get a grand total of $11.13. Okay. Then we had to figure out what other responsibilities that the employee must be responsible to put in as part of their paycheck, which is the Federal Insurance Contribution Act, also known as your Social Security and Medicare. Okay, so there's different names for it. Again, OISDI is another name for it. It's the original name, but a lot of nowadays it's just Social Security, and then HI is hospital insurance, which is better known as Medicare. Okay, so again, these are at flat rates. Okay, so Social Security is 6.2% of gross earnings. So here we figured out that it was $42.55. Then, excuse me, Medicare is 1.45% of gross pay, which is going to be, we calculated as $9.95. So then, right, these are the bare minimum that you have to withdraw from an individual's paycheck, right? We have to figure out how much they earned in general and then subtract out every single employee's responsibility for paying these taxes. Now notice this, these taxes are all payables. They are payments that the employee is telling the employer to pay for, okay? It's not like you give them their check and then they give you a portion of their check to go put into the government, right? They don't give you that physical amount. They tell you to withhold it from their check, making the company responsible to make these payments for the employee. So it's very and truly important that the employer is responsible to pay for the employee's portion, okay? Because again, you do have an option where if you choose to take the money 100% at the end of the year, you are responsible. The employee is responsible to make those payments at the end of the year. But in this case, most likely you are going to get the taxes taken out of your paycheck. So this is the bare minimum of what is required. So federal is always required. State is also required as well. But in this case, there is no state taxes in the state of Nevada. Okay, and of course, any benefits or any deductions would also take away from your paycheck as well. Okay, but in this case, we offered L nothing, so therefore there's nothing that was taken out from her paycheck. Okay, so after figuring out what her gross earnings was, we subtracted her federal income tax, subtracted her Social Security, and subtracted her Medicare. So therefore, she's walking away with a paycheck of $622.62, which is her net pay. Okay, now that's just the employee's responsibility for every paycheck that they are earning. Now, of course, especially with wage earnings, right? You can't predict how many hours that an employee is expected to work. This week she worked for 45 hours. Next week she might work only 40. And the week after that she might work 42 hours. So in this case, this number will vary from every paycheck to paycheck. Okay? So imagine that. Now, if her paycheck is going to be different every paycheck and she's receiving one every week, that is a total of 52 times that you have to recalculate her total gross earnings and figure out her federal taxes. So again, that's 52 times that you have to do. Now imagine if you had a total of 20 employees, right? 52, and you pay them all on a weekly, 52 times 20. Imagine that, because every individual is going to have something different on their W-2 form or W-4 form, right? Some of them will say single, some of them with no withholdings, no children to claim. Some of them will say I am head of household and I am claiming one child, or they could say that I'm married with no children, right? So every individual will have a per case scenario. So think about it. Not only do you have to do it 52 times per person, 52 times 20, right, is how much. How many are you actually recalculating every individual's paycheck, right? So imagine that, right? Now, that's only calculating the employee's responsibility. We, as a company, also have to consider our responsibilities for having employees. So our employee taxes are going to start off with number one, our federal insurance contribution acts, because we too have to match our employees' Social Security and Medicare as well. Okay? So that means if the employee is putting in a portion of their money, we must match them 100%. Now, you can either have it combined or you can have it separate, okay? So in this case, if you were to calculate company FICA, right, if you combine Social Security and Medicare, it would be a total of 7.65%. Now, of course, you can also keep it separate as well if you want to. You can have a separation between company Social Security and then company Medicare. But at the end of the day, you're still all paying the federal government. So whether you individualize them or whether you separate them or combine them together, it doesn't matter at the end of the day. Whichever one makes it convenient, you're still paying the same exact person, right? You're still paying the federal government. Okay, so here Social Security once again is 6.2% and Medicare is 1.45%. So exactly, we've already calculated this because we're looking based on the individual who earned this money. So in this case, L, right, we're calculating all the responsibilities for L as an employee. So in this case, so now that we figured out her check, we need to figure out what our responsibility is for having L as a employee. So in this case, whatever we calculated for her Social Security and Medicare is what we are going to be matching 100%. So in this case, for Social Security, it was that $42.55 plus the $9.95 to give us a grand total $52.50 worth of company FICA, right? So again, it is our responsibility that we match 100%. Okay? Then we, as an employer, also have to pay into state unemployment tax as well as federal unemployment tax. Okay, it is a requirement. So in this case, in case L does end up losing her job, we are going to also be paying into, helping her, pay her a little bit of the money for her to find another job. So in this case, that's what the federal unemployment is. Okay. In this case, it can vary between 0.5% to 6%. Now, in this case, why is this a range? It really depends on how many employees you have in your company, what kind of company you are. So, are you a sole proprietor or a corporation? And it's also going to be determined based on how much you owe. Okay? So, again, size of the company does matter in this case, right? Because this right here is going to be your responsibility to pay into federal unemployment taxes. So in this case, for this class, we're just going to assume the highest value, right? We're just going to do 6% to make it easy for class, so we don't have to be super complicated in this, okay? Now, in this case, this 6%, again, this is the company's responsibility to pay for unemployment tax, okay? So again, this is your Form 940. And again, we talked about the size of the company. So in this case, if we have 20 employees, right, and let's say we are, a sole proprietor, right? So therefore, if we are a sole proprietor, we are most likely not going to owe that much money or generate that much money from for the federal taxes. So in this case, that's why our percentage will probably be very low. Okay, but if you're looking at a corporation who has billions of employees, and especially a corporation, right, you're paying your employees billions of dollars. Therefore, you're probably most likely going to be taxed at the highest rate. Now, we'll talk about when these payments are due because, yes, of course, you are required to make these payments every certain time period, okay? And we'll talk about that 940 form in a few minutes here. Okay? So now that we established, okay, so we have to pay federal unemployment with 6% of gross pay. So if L earns $686, we need to calculate what that 6% of that is. Okay? For state unemployment, right? Every state is going to require some kind of unemployment, whether so in this case, not only does the federal require it, you also are required by the state to also pay for it. So again, employer is going to be responsible for making these payments. And these payments is also going to depend on the size of the company as well. And in this case, you have to collect up to $36,600. And again, the rate could be anywhere from 0.25% to 5.4%. Okay, now most new businesses, right, they are required to make a payment up to 3%. Okay, so again, in the state of Nevada, if you decide to open up a business, you are automatically going to be subjected to be charged at 3% for state unemployment. right? But then as gradually, if you make your payments on time and so on and so forth, and the size of your company is not that big, right? You could definitely end up paying a lesser percentage later on. But as a new business, you are required to be making payments at 3%. So there you have it. Federal is 6%, and then state is 3% of gross pay. Okay. Then other payroll taxes that you can be responsible to pay for. So again, if you offer things such as workers' compensation, if you offer to pay extra for holiday pay, vacation pay, sick pay, or any retirement benefit plans or anything like that, again, especially for retirement benefit plans, right? If a individual is responsible to put a portion of their check in there, you are responsible as a company to either match them dollar per dollar, match them 50%, or whatever it is, right? And including health insurance. So if you make a decision where the company pays half and the employee pays half and the company pays the other half, then you're gonna have to put that in there as well. Okay. So again, these are other things that you are responsible to make payments for your individual employees if you offer them. So a 401k plan, medical insurance, health insurance, whatever it is. Okay, you are required if you offer it to take it to pay into it as well. Okay. But here's the one that's most important because it is required by the state. So in the state of Nevada, you are required to pay into a workers' compensation. Now, workers' compensation is going to depend on the intensity of the level of the labor, right? So what is workers' compensation? Workers' compensation is a legal payment to protect the employee in case they get injured on the job. But what it is mostly for, it's a legal protection against your company, so then in case the employee decides to sue the company, that's what this money is for, right? So again, if the employee does get injured on the job and the company fails to pay for medical insurance or pay for any medical attention, then that will be 100, because again, when an employee is on the job and is currently working during the hours, right, for whatever job that they're doing, the company is responsible for the employee. So if they get injured on the job, right, that means it's the company's responsibility because the company is liable for every employee, right? So if the job is an intense job, then the percentage of workers' compensation is going to be higher, right? But in this case, we're looking at a very small business shop that doesn't really require that much labor, so less likely to have those injuries occur. So 1.36% is pretty much okay for a small business, right? But if you're looking at a construction company, that is 100% a huge, huge lawsuit, right? So in this case, workers' compensation can go beyond just paying for medical bills, right? They can provide training for those who got injured on the job that can no longer do the job, right? They can require these companies to pay for training, right? To be retrained so they can get back into the workforce, right? So again, that is usually the buyout option, right? So it's either they take the money or they take the buyout option where, hey, if you don't sue us, then we can do this for you, where we can generate a program for you to be able to recuperate and be able to get back into the workforce. So usually that is what workers' compensation does. Once again, it is a legal obligation for the company, right? So again, in the state of Nevada, you are required to have a workers' compensation, but once again, that will depend on your labor, your job intensity, and so on and so forth, right? What's the likelihood of you getting injured on the job? So In this case, for this class, we're going to take a look at 1.36% of gross pay. Okay. So these are the bare minimum, since we're not going to offer any extra benefits or any extra deductions, right? These are the bare minimum because they are required by the federal and the state. So in this case, we got Federal Insurance Contribution Act, which is an obligation. So here you go. We said it was based on gross pay. So if L earned that 45 hours at $15.25 per hour, right? We have right, Medicare at 6.2% and, or sorry, Social Security at 6.2% and Medicare at 1.45%, right? Which we have already calculated to be $52.50. Then FUTA, which is 6% of gross pay. So in this case, we take that $686 and multiply by that 6% to get a grand total of $41.18. And then, of course, SUTA, which is state unemployment, we said it was going to be 3%. So 3% of that is going to be $20.59. And then last thing required by the state is going to be workers' compensation for that 1.36%, which we calculate to be $9.33. So therefore, we're going to identify these, right? All of these are going to be liabilities as well, because you are going to either make a payment to the federal government, the state government, and for workers' compensation, you're going to be making payments to a workers' compensation agency. Okay, so in Nevada, we got Gen X. Okay, if you ever heard of them, they are a workers' compensation case handler. So yeah, they handle anything that has to do with the employee getting injured on the job. So therefore, there you go. Right, those are the bare minimums that that the company is required to pay, which is your federal and state taxes for having L as an employee. So not only, right, so in this case, not only are you having to figure out the employee's taxes, you have to figure out what the employer's taxes, and every employer is going to earn a different type of amount, right? Because it's based on gross pay. So not only do you have to calculate the individual's paycheck, you have to figure out what taxes you're going to be making a payment for that employee. So that's 2 times the amount of calculations, right? And it will vary because, again, if L earns X amount of dollars, right? If she earns 45 hours this week and she decides that next week she earns 40, and then the week after that she earns 42 hours, you're going to have to recalculate this as well because it's based on gross pay. So that means not only are you calculating for your employee, you're calculating them for twice the amount, right? So not only that, if you have 20 employees, imagine that. So first off, we did do 52 times per person times 2 times 20. So think about it. So the person who does payroll is usually going to be the most toughest job, especially depending on how many people that they have. Now, that is exactly why it is so much more easier to outsource your payroll to someone else. And that's why we'll talk about when we talk about Intuit, right? When we talk about QuickBooks, they offer their own payroll subscription that you can pay for that does all the calculations for you and collects all the federal taxes for you. All you have to do is just pay your employees and pay your federal taxes and state taxes, right? Now, in this case, right, now, like I mentioned before, it's much easier to outsource, to pay someone else to just do the job for you because, again, think about it. If you have 20 employees, you have to calculate, and this is 52 paychecks per year, 52, right? You have to do twice as much, and then you have to do it 20 times because for every employee as well. So in this case, that is exactly why. So not only are you paying $686 for L, you're also paying an extra $123.60 extra for having L as an employee. So in this case, she already costs almost $900, right? $686 plus 123, right? Very close to, or actually it's close to 800, okay? Already. Okay, so again, employees are fairly expensive. And guess what? They are a recurring expense that you have to make a responsibility to pay. Because again, your employees are not going to pay, or they're not going to work if you are not going to pay them. So that's why that's one of the hugest factors when it comes to having employees, is they are a major chunk of your business, because you have to pay them constantly. Where your vendors, you have the choice to pay them a month later, or the month, a month later, or whatever their due date is. And of course, your customers, you want to kind of keep your customers in line too, and have them make their payments on time as well. So again, at the end of the day, um, employees do cost a lot of money. Right? So let's go ahead and, so any questions so far?
No, we're good.
No.
So let's talk about those federal form taxes that you have to are required to have to pay. So again, for most cases, if you are filing your taxes every year, right, you are responsible to make your payments on time. Now, depending on what you're filing for, so every state's going to have a different number. But for the federal, it's going to be your 940s and your 941s. Some of them are coded as 943s. Okay, so again, this is just the federal tax form that you are required to fill out for the IRS at the end of the year, and this is going to give you a report on all the stuff that you're required, such as taxes that you paid, and so on and so forth, right? Um, so then that, yeah, and then of course you are also responsible to also provide your employees a copy of the W-2 form, right? So what that W-2 form basically does is it gives you the total amount that you paid them for that year, with all the deductions and all the taxes you've taken out. And of course, you don't tell the employee that you paid them, but you do let them know how much money that these individuals have earned from you, how much taxes are withheld, and so on and so forth. Okay, and then they file for their own personal taxes. Okay, so again, these forms are very important. If you actually read the form 940 and 941s, they do tell you that you are responsible to to file every January 31st, right? So we're talking about like filing taxes. So if you start on January of this year, that means you are subjected to file those forms by January 31st. Yes, question.
Yeah. Can you give an example of like what quarterly, monthly, semi-weekly, and annual pay would be?
So
Like
for
an example of which occupation?
Okay, so for example, like a major corporation such as Walmart, right? When we talk about Walmart, they're paying their employees. They have 1 billion employees, right? So that means they are collecting billions dollars worth of federal taxes, right? And most likely, the federal government is going to go after the corporations, right? Much more than a small business that only has 20 employees and barely makes a lot that much for federal taxes, right? So in this case, it is if that was the case, right? Most likely, they're gonna require corporations. Now, in this case, corporations actually have to pay every other week. So if they are processing paychecks bi-weekly, so that means every other week they employees get a paycheck. That means the other week that they are not doing payroll, a corporation would have to be required to pay those federal taxes. Because think about it, 1 billion employees, that means the $1 billion in payments, therefore $1 billion in federal taxes. Most likely, the federal government's most likely going to go after them because they have the money. Now, for a smaller business, right, who has only 20 employees, very small, maybe a sole proprietor or a partnership, whatever, or an LLC, since they're filing taxes, right? They're most likely going to they can most likely get away with making their payments um, at the end of the month, sometimes even quarterly, because again, it depends on the size of the business, right? How much federal taxes can a small business generate through payroll? Now we just saw we only paid what, maybe, or for just L having an employee as an employee, that was only $200 per employee. Now think about a corporation who has billions of people that they make billions of dollars for. So in this case, for a small company like us that has just only one or two, a couple of employees, we can even go as far as maybe getting away with every quarterly. So every 3 months, you have to make these federal payments. So once again, it's based on size, the amount that you owe, but just for safekeeping, the best bet is to just file every monthly, just so then you don't fall way too far behind. Because again, if you miss a payment to any federal agency or state agencies, you can get penalized, and it's pretty heavy. So again, that's an example of monthly or quarterly. Now again, semi-weekly is going to be the corporation, where you pay every other week. And then of course, annually. Now annually is where if you only have one employee, you're a sole proprietor, or maybe you're a business owner, then again, you're only collecting so much federal taxes, so you could get away with paying at the end of the year when you file your 940s and your 941s at the end of the year. So again, that it will just depend on the type of business that you are, okay? And how many people you have and how much money you generate. Okay? So with that being said, now don't forget, you also have to provide, if you have independent contractors, you have to also provide your 1099 forms, which is also another tax form that you are required to provide your 1099 contractors. Now again, you don't pay any federal taxes for having 1099 workers, so that's something that you want to make sure that you consider, that it's not included into your 940. Okay? All right. So good so far? Okay, so deposits are going to be made through the EFTPS, which is the Electronic Federal Payment Tax. EFTPS, the Electronic Federal Tax Payment System, right? Because in this case, they live in the digital age now. No one's going to write a check for $1 billion and send it to the federal government. They require you to actually pay via online through the EFTPS. Okay? So again, $1 billion companies such as Walmart, what is the quickest way to get the money? Electronically wire it. Okay? Especially $1 billion. No one's going to write $1 billion check to the federal government. So same thing with the state government, right? They are living in the digital age where everything's being wired directly to the government. So that's why a lot of government programs, right? They usually, depending on what it is, they get the money. They get the money pretty quickly, but distributing the money is another topic. Okay. So again, yes. All right. Any questions?
No.
All right. So yes.
I mean, I understand that you were saying, like, when to pay for taxes, federal
Mm-hmm.
taxes, and the example of, like, who would have the capacity to pay,
Mm-hmm.
but I don't understand exactly who would actually get paid on that basis.
What do you mean who? The federal government, the state government, or the employee?
Yeah, the employee or the company.
Who gets paid?
Correct.
So in this case, right, your federal taxes all go to the EFTPS, which is the Electronics Federal Tax Payment System. All your state payments that you have to make a payment to, so for your state unemployment, you have to, depending on what the state that you're going to, whichever agency it is, it's going to be whatever it is. So in the state of Nevada, it'd be DETR, the Department of employment, training, and resources, right? You would be making payments to them. But for instance, you these federal taxes, you never pay the employee. These employees, they only walk away with their paycheck. Okay, these federal taxes are a requirement because it's the company's responsibility to make these payments. So we're paying the federal government, which is the EFTPS, and we're making state payments to whoever the state agency is, and then we make a payment to for workers' compensation, whatever workers' compensation agency that takes us, right? You're making payments to those people every quarterly, every monthly, or semi-weekly. So that does that answer your question?
I guess I'm more specifically wanting to know, like, which employee would accept an annual payment? Like, what kind of occupation pays their employees on an annual basis?
Okay, so we're not talking about employees. We're talking about employer. We're talking about paying the government, not the employee. Because the employee, right, we already talked about that. The common ones that you would pay your employees would be weekly, bi weekly, or semi monthly, right? You would pay them either on a weekly basis or you pay them every 2 weeks or every twice a month, right? We already established the employee section that you pay them more frequently. But the government, depending on what kind of business you are, so an occupation, for example, if you're your own business, like an independent contractor, and you have a small business and you only have one other employee, and let's say your business, you are, I don't know, a paint shop place, you're not making that much money in regards to making a payment to your employee, nor are you making that much money that you're generating for federal taxes, right? Because you only have one employee that you're paying. So in this case, if you have that one employee, you can get away with making a payment to the government at the end of the year. Now, occupation, so Walmart, they have people who are staffed, whether they are on the floor at the registers, they could be stalkers, they could be, they just Walmart employees in general, right? Since their business is so big and every employee does a specific job, you're still at the end of the day, if you're Walmart, you're still making payments to them regardless of what job they do because they work for your company. And because you're paying billions of employees, because again, one Walmart shop location can have up to 200 employees that are working year round. Right? So with that 200 employees working year round, including everyone that's working up, like maybe management, maybe people who are the president, right? They are still considered employees of the company. Since they are working, right? They're being paid a lot of money. So therefore, there's a lot of federal taxes that are being paid out or being taken out of paychecks. So that's going to be a great example where because of that amount of money that you're collecting for the government's going to want that money as soon as possible. So that's why a semi-weekly, which is every other week that you don't have payroll, the government's going to want you to pay them every other week because that's $1 billion that you can get instantly. Does that answer your question? The different occupations, it doesn't matter. It matters by how big the company is, how many employees you have, and how much money that you collect for the federal or state agencies. That's how you determine your payments. Is that more clear?
Yeah, but I was kind of wondering, like, I don't think there's a job that you can accept to where all of a sudden you get paid or you have to pay taxes on an annual basis. I mean, I understand the business standpoint, you're making revenue and you report that stuff, on an annual, quarterly, monthly, semi-weekly basis, depending on the size of the business and the number of employees. But I don't. I think that there was in a previous slide something that said that there was a way that people could get paid annually, bi-weekly, monthly, and then also like I guess quarterly. But I don't really understand how someone accepts a paycheck quarterly or annually.
Okay, so annually usually is for salary earners, right? Now, anybody who's the president or someone who is a higher up, they don't need the money right away because they're making hundreds and thousands of dollars. So they would most likely be okay with a quarterly payment. Now, again, most likely not, right? You're most likely going to have more likely a monthly payment. That's why I said on that slide right there when I was talking about earlier, you're talking about this slide right here. This one is just an option you can have, but like I mentioned, you don't necessarily have to go through with people who pay you quarterly or pay you semi-annually, right? In this case, this is just an example of what you can pay. But again, usually the higher ups are most likely going to be paid quarterly. Or for instance, right, if you have an employee that comes in every other month, then you don't have to pay them right away. Where if you have someone that works on a constant schedule, they are going to want their money as soon as possible. That's going to be an example. So, for example, a sales rep, right? Do you think a sales rep is going to work every week? It's going to be difficult. They might have to work every month. So, in this case, that's going to be an example of a person who's like they're doing their own business, right? Or they're representing the company, but they are not going to be constantly working on a weekly basis or a daily basis. So those kind of individuals will be most likely going to be paid monthly or quarterly because of how often they work. Okay? Now, an annual payment, no one's going to get paid at the end of the year, for sure. But an annual payment is usually for those where they give you an estimation of how much you are going to earn for the whole year. Okay? It's not a payment. It's a type of payment that you normally see. So again, when you apply for a job, they say that, oh, you're going to earn $50,000 per year. Now, are you going to get paid at the end of the year? No. Like you just mentioned, no one's going to be able to work for you for one whole year and get a fat check at the end of the year. No, it's distributed, right? Whether it's weekly, bi-weekly, or semi-monthly, right? But in this case, that is a type of measurement of how you can get paid. So in this case, when you apply for a job, they tell you what you can make at the end of the year. Yes, does that make more clear sense?
Yeah, that's perfect.
Awesome. Right. But for the federal government, right, that's going to be a whole nother can of worms because most likely the best way to do it is to just make monthly payments just because that way it so you don't accidentally fall behind on your payments. So in this case, right, because you're dealing with everybody else, right? You're dealing with employees, you're dealing with vendors, you're dealing with customers. So it's very, very important that you don't fall behind on making your federal payments because, like I've mentioned, right, if you do fall on your federal payment, you will get taxed very heavily and it's not forgiving. Okay? It's really high. So in this case, it is very important that you don't fall on those payments. But once again, because if you're running your business, it's very common that you could possibly forget to make a payment. So they do recommend you to just make monthly payments so you don't fall behind. Like, even if you only have 2 employees, just make a monthly payment. That way you have a track record that you made a payment this month and so on and so forth. So let's talk about chapter review. Chapter review, we talked about employees, what the different types of employees are. So again, we have our common law and our statutory employees, right? Those are going to be people that are going to be on your payroll, while all the other types of employees, so your independent contractors, your leased employees, all of those kind of individuals, they're just mere expenses to the company where you don't have to pay anything to them except for just the hours that they work. Then we talked about what those employee taxes entails, right? We know that when an employee works for you, these are the responsibilities that the employee is responsible for. So federal income tax withholdings, as well as FICA tax, which is Social Security and Medicare. So again, federal income tax withholdings, we know that we're going to be using the percentage method from the circular E table, and it will depend on what how much they earn and what's the pay frequency. And then, of course, FICA, so your Social Security and Medicare, which is going to be 6.2% for Social Security and 1.45% of Medicare. Okay. Again, remember there's a cap limit for Social Security, right? 147,000 is the cap limit for Social Security. Medicare, there's no cap limit. Then we talked about the employer's tax responsibility, right? We have to match the federal insurance contribution act for the employee. We also responsible for federal unemployment, state unemployment, and workers' compensation minimum. Okay. So again, FUTA, we said it was federal unemployment, which we said for this class we're going to learn it as 6%. State is going to be, once again, 3% because we're assuming that we're a new business. And last but not least, workers' compensation is 1.36%. Okay. And of course, these are the important files that you need to know. So again, an SS4 form is for you to apply for an employer identification number. W2 forms for employers to submit to the state agencies. W4 forms are for your employees to submit to your employer to withhold the taxes. And other forms are going to be 1099 for your independent contractors or small businesses that you're contracting. And then, of course, you got your 940, your 941s, your 943s for federal unemployment, right? As well as your other federal taxes. And, of course, if you want to learn more about everything that you want to know about payroll, go ahead and visit the irs.gov/publication15. You get to learn about everything about employees, and then you even get to learn about how to do payroll manually, and so on and so forth. So again, a lot of information. Again, I can only give you the bare minimum of the common ones that we normally see. Okay, so there you go. All right. So let's also talk about the review. So we talked about how to calculate the percentage method for federal income tax withholdings, right? This is the example here. And this is what you have to know to journalize, right? You're gonna make sure that when you look at your gross earnings, you are gonna pay them as a salaries and wages expense, and then everything other than that are all gonna be payables. They're all gonna be liabilities because federal income tax, right? You're not holding on to that money for yourself. You're holding that money to pay those federal governments. So in this case, you're gonna owe the federal government money. So in this case, you're gonna owe the federal income tax, the Social Security, Medicare. And of course, you're going to pay your employee. And then for the employer's taxes, you got payroll tax expense, which includes the company FICA, FUTA, SUTA, and workers' compensation. Okay. All right. So let's take a look at our example here in right here, the chapter 12 payroll exercises. Okay. So employee, right? We're gonna see so this one right here. Bob is a married man with 3 dependents, and he files as head of household, okay, and only has 1 primary job. Okay? And of course, he earns $19.50 per hour, and he worked a total of 72 hours this payroll period. Okay, the payroll period is bi-weekly. Okay, so use the table below to answer the question. So here, I will be providing you all the tables, okay? So you are not going to be responsible to be utilizing the circular E table by, downloading it from the irs.gov. I will be providing you the table, okay, for every exercise, for the exams, and so on and so forth, right? I will be providing you the exact table so you don't have to look for it, okay? You just need to know how to use it. Okay? So here you go. Table 6 right here is your paycheck. So if your monthly you get 12 paychecks. If you're semi-monthly, you get 24. Bi-weekly, you get 26. Weekly, you get 52. Okay, paychecks. And then here's the table, right? We're looking at head of household. And again, this is the married one. Okay. So that's your table right here. So, number 1, solve for Bob's federal income tax withholdings. Okay? So, what do we need to do first? What do we need to solve for first?
The amount of the paycheck.
The amount of gross earnings. So, in this case, he has worked a total of 72 hours and he earns $19.50. So, how much is that going to be? So, 19. Sorry, go ahead.
1404.
1404. Okay? So then what's the next step? In this case, step 2. Any extra income or any deductions? Did we offer him any benefits?
No.
No. So in this case, any extra income? No, he only has one primary job. And then you're going to subtract any extra deductions here. So did we offer him any benefits? No. So in this case, his total amount that is taxable is going to be $1,404. Okay? So then, what do we need to do now? We need to figure out which area he belongs to and which percentage he belongs to. So in this case, he's earned at least, but not over.
1310.
1310. He's definitely earned more than 1310, but less than 2,896. So that means he belongs into this row right here. Okay? So in this case, he's going to get taxed at $56.40 regardless of what he makes. Okay? He's going to be subjected to a 12% tax on any dollar in excess. And then in this case, he gets to keep $13.10 without being taxed. So in this case, how do I calculate how much in excess he's earned?
Okay, you're going to do 1404 minus 1310.
Mm-hmm.
And that gives you $94.
Okay.
Okay, then you're going to do 94 times 12%.
12%.
And that gives you $11.28.
Okay.
And then you're going to add the 5640
5640.
plus 1128,
Okay.
and that gives you 6768.
6768. Good. Right? Now, he's claimed all 3 children. Right? He has 3 dependents. So in this case, how do we figure out step 3? How much does each
Okay.
child cost?
It's $2,000 per child.
2,000 per child. So he has 3 of them. So that's a total of $6,000.
$6,000.
Now, how many paychecks is going to earn?
26.
He's going to earn 26 because it's a bi-weekly payroll. So he's going to earn 26. So you're going to figure out if each child costs $2,000 per year, right? We want to know how much per paycheck. So in this case, $6,000 divided by 26. How much do you get?
$230.77.
Okay. Now, last but not least, that has to be withdrawn from his federal taxes.
Okay, so it's like 230.77 plus 67.68.
It should be like this: 70, 67, 68 minus $230.77.
Okay,
Okay, so how much is that?
169.0809, 163.09.
it's negative, right? Because this money is taken out from his federal income tax. Now, what's
Okay.
the rule here? If it's negative, what does that mean? It means you are not going to withhold anything from his federal because it's below. But you don't
Okay.
pay him, okay? You don't pay him more. That means he's claiming every single federal income, every penny from federal income tax. So that means at the end of the year, he's most likely going to have to pay a little bit to the government. Okay, so there you go. That's the first one. He's not going to get paid anything, or he's not going to withhold anything
Okay, so
because the amount of children he's claimed is
yeah.
over than what he's supposed to be getting.
So when you see a negative, that means that there's no deduction.
Correct.
Okay.
Mm-hmm. All right. Yes.
What was the 15 and the 14 again?
15 and 14, what do you mean?
I mean 56 and 76.
56 and 76. So this right here,
I mean
this
67.
okay,
Yeah.
so 5640 is what the government's going to take away from your paycheck regardless of the amount of money that you earn. This $11 extra is what you made extra. Okay? So you earned a total of 1440, right? Or 1404. The government lets you keep 1310, no tax. Okay? So that means you earned $94 in excess. So because you earned $94 in excess, you are subjected to that 12% extra charge. Okay? Because you earned more than the threshold that they allow you. Okay? So in this case, that extra 12% is that $11.28 because you have to add that to what the government's going to take from your paycheck regardless of what you earn. That's where you get $67.68.
Okay, cool.
Mm-hmm. Okay. So number 2, yes.
Oh no, that was an accident. Sorry.
No worries. Okay. All right. So number 2, solve for Bob's FICA taxes, so Social Security and Medicare. So Social Security, how much is the percentage for Social Security?
6.2%. 6.2%.
Mm-hmm.
6.2%.
Mm-hmm.
Okay.
Off of gross earnings, right? So he earned a total of 1404.
Okay. So that gives you 8705.
Okay. What about Medicare?
Okay, that's 1.45%.
Okay.
As that would give you $20.36.
Okay. So then let's go ahead and journalize Bob's payroll expenses. So how am I going to issue Bob's payroll?
You'll be salary and wage expense,
Good.
and that would be for the 1404.
Good. All right. So then what am I taking out from his paycheck?
Okay, FIT.
FITW. Mm-hmm. Federal income tax withholdings, which is a total of,
0.
right? We calculated that as 0. Okay. What's after that?
Okay, Social Security, and that's the 8705.
And
Medicare, 2036.
so how much is Bob going to walk away with?
$1296.59.
Okay. 5 plus 6 is 11 plus 9. Yes. Good. Okay. So that's how much he's going to walk away with because he gets no extra taxes because he claimed his children. So he's claiming that he needs extra money to be able to support his family. Okay. So therefore, he still has to pay the federal taxes for his retirement. So at the end of the day, he's walking away with a check for $1,000, $296.59. Good. Now let's go ahead and talk about employer. Solve for the company's FICA, Social Security, and Medicare based on Bob's earnings. So since we said Social Security and Medicare is 6.2%, right? Which we already solved to be how much? How much was his Social Security?
8705.
8705. And then how much was his his Medicare?
$20.36.
$20.36. So in this case, grand total for company is going to be
107.41.
okay. You said 107.41. Good. Okay. Solve for federal unemployment tax. How much did we say federal unemployment is going to be?
6%.
We said it was going to be 6% off of his gross earnings. So how much is that?
84.24.
Okay, good. Then, how much did we say state unemployment?
3%.
3%. Which in this case gave you a total of
42.12.
4212. Okay, right. Just take half of your federal. And then workers' compensation. How much did we say workers' compensation is going to be for?
1.36%.
1.36%. Which gives you a total of
1909.
1909. Good. So then journalize the company's payroll tax liabilities. I'm going to push this down a little so we can have. Okay. So what do I have to journalize?
Payroll tax expense.
Payroll tax expense. Okay.
And FICA.
Company FICA. Good. Which was a total of
107.41.
107.41. Okay. What's after that?
FUTA payable.
FUTA payable. Okay. For a total of
84.24.
$84.24. Okay. Then what's after that?
SUTA
You have
payable.
SUTA payable.
42.12.
Okay. And then what's the last one?
Workers' compensation.
So we do workers' comp. For how much? How much was workers' comp?
Excuse me, 1909.
1909. So in this case, what is the grand total payroll taxes that the company is subjected to have to pay for having Bob as an employee?
252.86.
252.86. Okay, good. All right, good job. So let's do the second example here. We got Susan. Okay, Susan is a single woman with 0 withholdings and has 1 primary job. Okay, she earns $25 per hour and she worked a total of 38 hours this week. The payroll period is weekly. Okay, so here's your weekly table for a single person. Okay, and right, so how do we solve for Susan's federal income tax withholdings?
Okay. It would be 20, she works 25 hours.
$25 per hour.
So she made $950.
Okay, good. Any other income or deductions that we provided for her?
No.
Okay, so again, plus any extra income minus any deductions will give you $950. Okay, so then we got to go to the circular E table.
Yeah. Okay, she falls in the line of at least $447, but less than $1,052.
Okay.
And the amount of withholding. Okay, hold on. Okay. So it's 950 minus 447, so she'll be taxed for the 503.
Okay. That 503
Times 12%, it'll be $60.36.
60.36.
Yeah, $60.36.
Okay. All right. Plus what else?
So next it'd be 60.36 plus the 1980 withholding,
Mm-hmm.
and that gives you $80.16.
Okay. All right. So she doesn't claim any children or anything, so no extra deduction there. So in this case, no extra withholdings or deductions. So in this case, she's subjected to $80.16. Okay. All right. So number 10. Calculate Susan's FICA. So how much was Social Security again?
6.2%. So it'd be 950 times 6.2%.
Mm-hmm.
And that gives you $58.90.
Okay. Medicare, how much is Medicare?
Medicare is 1.45%, and that would be the 950 times the 1.5%.
Mm-hmm.
And that gives you 1378.
Okay. So then now let's go ahead and journalize Susan's paycheck. Okay, so in this case, what am I going to be recognizing?
Salary and wage expense.
For how much?
$950.
Good. Okay, tax. What's the first tax?
FITW payable.
Mm-hmm. Federal income tax withholdings payable. For how much?
$80.16.
Yes, $80.16.
And next is Social Security.
Okay.
And that's for 58.90.
How much is
Medi-
Medicare?
13.78.
So how much is Susan gonna walk away with?
$797.16.
$797.
Uh-huh.
And how much cents?
16.
Okay. Yes.
Where did the $80.16 come from?
That's her federal income tax withholdings.
So the 19 is what we calculated, and the 60 is what?
Oh, I go back. Where are you looking at?
At the bottom it says 60.36 plus 19.8 equals 80.16.
So remember, 19.80 is what the government's going to take away from your paycheck regardless of what you earned. This $60.36 is what we calculated in excess of what she's earned. Because the government, remember, so $950, right? The government lets you keep $447, no tax. Okay? So that means she's earned $503 in excess. Because she earned extra money, right? That extra money is going to be subjected to a 12% tax. So that's where the $60.36 came from. And you're going to have to add on top of that what the government's going to take away from your paycheck regardless of what you earn. So that's how you get the total of $80.16.
Okay, cool.
All right, so she gets to take away $797. So she's paying almost $150 worth of taxes. So again, the higher you earn and the more taxes you pay. Okay. So employer. So let's go ahead and solve for Susan's for the company FICA based on Susan's earnings. So in this case, we already said what was Social Security?
58.90.
Plus the Medicare.
Okay. 54. 58. 13.78 equals 72.68.
Okay, 7268. We need to figure out what her federal unemployment is, right? Which we said was how much?
It's 950 times 6%,
Mm-hmm.
so it'd be $57.
How much?
57.
Okay, there we go. And then state unemployment.
So that's 950 times 3%, and that gives you 28.50.
Okay. And then workers' compensation.
Okay, that'd be 950 times 1.36%,
Mm-hmm.
and that gives you 12.92.
Okay. So therefore, how much taxes do we pay for having Susan as an employee. So what do I have to pay here? How do I journalize this?
Okay, it will be payroll tax expense,
Okay.
and that's for $170.70.
$170.
Yeah.
Okay. What else?
Okay, the company FICA, $72.28.
I thought it was 68 cents.
Okay, 68. Okay. So we gotta make a little adjustment there.
Okay.
The footer payable is $57. Suitor payable is $28.50. And workers' comp is $12.92. So that comes to $171.10.
Yes.
The FUTA and SUTA, is that for, how do you calculate those, or are those on a table?
No, they're not on the table. I already told you that for this class, I'm already designating the number for you. So it's 6% for federal unemployment, and it's 3% for state unemployment. Okay, so 6% for federal unemployment and 3% for state unemployment.
So then we just plug those numbers in?
Mm-hmm. And then workers' compensation is 1.36%. Okay.
And then FICA?
FICA is your Social Security plus your Medicare, which is 6.2% plus 1.45%. In this case, we already solved for that and up here when we solved for the FICA separately, right? We already solved for Social Security and Medicare separately for Susan. So we just combined the two.
So we added them together?
Mm-hmm.
Okay, cool.
Okay. Any other questions?